Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. The title of this video is CCI Indicator Trading Mistakes Part 1. CCI Indicator Trading Mistakes Part 1. Alright. The CCI is the Commodity Channel Index indicator. I have here on my chart the CCI period 21. I recommend to traders not to use period 14, to use at least a period 20 or something else. That's my recommendation. So you can disagree with me, but I don't recommend period 14 to traders, but there is a reason behind why traders are using period 14, which I talk about in one of our video about CCI, but I don't want to talk about that now. Okay, there's a reason for it. Okay, all right, so I'm using period 21, the commodity channel index period 21. The oversold zone is set at minus 100, negative 100, and the overbought zone is set at positive 100, plus 100. So in theory, all right, you see the theory, all right, what they are teaching, all right, what they told you is that when it goes above 100, sell. When it dip below minus 100, buy. Do not follow that advice. Let me say this again, all right? So if you are a new trader or you go on the internet, you are learning about the commodity channel index, what you will see is that you will be told that when the commodity channel index reaches the overbought zone, you should sell. Do not sell, all right? Look for opportunity to sell. If there is no opportunity to sell, do not sell, okay? And in this video, we will discuss, okay, the mistakes that a lot of traders are making when they are using this trading tool, all right? They also told you that when the commodity channel index dip below minus 100, you should buy. And you spend, what usually take place, trader will spend most of their time trading an indicator. So they're looking down, all right, while the action is taking place above the price, all right? So the action is happening here. Traders are making this, professionals make this decision, looking at the chart, and some traders spend their time looking at the indicator. All right. The commodity channel index is trying to mimic or to duplicate what the price is doing, but there is sometimes differences between what the commodity channel is doing and what the price is doing. I'm not saying that one cannot use the commodity channel index, all right? But there are mistakes that traders are making, all right, which we're going to discuss in this video. One point I need to clarify here is that when we are trading, the question that we want to ask, what are we trading? So I have here JP Morgan Chase stock on a daily chart. Am I trading the commodity channel index or am I trading JP Morgan stock? The correct answer is that we are trading JP Morgan stock. We are not trading the commodity channel index. Now, the commodity channel index is there to help us to dictate, to smooth the price, all right, to smooth the price. Because sometimes the volatility, you can see something on the chart and you may say, all right, okay, it's distorted, blah, blah, blah. It's smoothing the price action. All right? Before we continue and go to the nitty-gritty of this video, CCI indicator trading mistakes, all right, I want to clarify one point which I did in all the video that are recorded about this indicator. When we are using the commodity channel period 21, we are comparing the price to the moving average 21. When we are using the commodity channel index period 30, we are comparing the price to the moving average 30. When we are using the commodity channel period 50, we are comparing the price to the moving average 50. If you are using, all right, the default setting 14, the commodity channel period 14, you are comparing the price to the moving average 14. All right. Now, in fact, the commodity channel index can be replaced by the Bollinger Band. So I said it before, so I don't want to dwell on it. If you are using, now I'm using the commodity channel period 21. It's like a place on my chart, the Bollinger Band period 21. The zero line of the commodity channel period 21 can be replaced by the moving average 21. The positive 100 level, which we call overbought zone, can be replaced by the upper bound of the Bollinger Band period 21, because I'm using CCI period 21. And the negative 100, the oversold zone, can be replaced by the lower bound of the Bollinger Band 21. If you are using CCI period 30, in fact, it's like you are using Bollinger Band period 30. But there is a little difference, because the CCI itself is representing the price. So, though I'm talking about Bollinger Band, the Bollinger Band is just the plus 100 level, the minus 100 level, and the zero line. Now, the CCI within this band here is the price. It represents the price. So the CCI is mimicking the price. So we can say to a certain degree, we can replace the CCI itself, all right, by the price. Now, but if we include, the overbought zone, the center line, and the oversold zone, we have a Bollinger Band, and the price is and the CCI can replace the price here. So when we are looking down like this, it's like we are watching the Bollinger Band 21, and the price action is replaced by the CCI itself. Okay, now I clarify that point. Let's move on to the mistake that traders are making when they are using the commodity channel index. I highlight here the oversold zone, the price D below minus 100, here D below minus 100, here D below minus 100, here D below minus 100. Now I didn't talk about this one here, I have a reason for it, I will explain it to you soon, alright? So let's start with the first one and see what mistake can happen here, and pay attention carefully. It's just to clarify why traders are making mistakes. So when you watch this video, you know now how to trade a CCI indicator, so you don't repeat the same mistake over and over and over and over. All right. So the first one is here. You can see that the CCI D below the minus 100 level. It was here. But I'm going to put a vertical line there for the first time when the CCI reaches, the oversold zone. This is where we were. You see, the first time it D below it, you see it D below it first, and then stay below it for a long time before coming out. Now, as it D below the zero line, is D below, not the zero line, D below the minus 100 for the first time, the price did not go up straight away. You see, these days here we are on a daily chart. Perhaps some people bought it. If you see, attention please, if you see the first candle here, it's a green with a wick up, a wick down. So some traders, aggressive buyers, bought it straight away because the CCI is oversold. Was a mistake. But as the CCI was still below, the price was going down. Okay? Another approach one can use to avoid this mistake is to wait until it D below the minus 100 and stay below it, down by, until it crosses back above it. I don't teach this kind of trading methods. It's just something, if you are making this mistake all the time, you can use that to avoid rushing into the trade. Alright? So, if you buy straight away here, because the CCI is oversold, but the price was not oversold. The oversold CCI is not equal to the price oversold. Are you trading the CCI or are you trading the price? Make your choice, please. Okay? You see now? So the price went down, so people will be buying, and the price going down. And finally, it went up. Let's try something else. I'm going to clarify one point quickly here. I'm going to just draw a trend line. How professional trading. Pay attention to the trend line. This point and this point allow me to draw this rising trend line. Look, the CCI was oversold before, but look, there was a bullish trend line. Professionals were waiting for the price to retest the trend line. If you are trading the price, you are drawing your channel, your trend line, you will know when you should look for opportunity to buy. So though the CCI was oversold, we are not trading the CCI, we are trading the price. We keep eyes on the price until the price retests the trend line here. That's where the professional came in now and bought it. All right? Let's look at another mistakes that traders are making. This time, let's move my vertical line. Boom, 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 boom. Here, right here. Am I right? Okay, am I right? Am I right? Let's see clearly. We don't want to lie to ourselves. I need to move it a little bit. I think right there, right there. Here. Let's see. That's it. Here again, the CCI dipped below the minus 100 level for the first time, but the price did not go up straight away. If you buy on the daily charts you did here, look where the trend line was. Too far away, isn't it? Yeah. So, but though the CCI was oversold, all right. Sometimes I see traders will purchase the TS CCI Pro trading system from us at dayprotrader.com, and they don't spend time to read everything through and to understand what's going on, and they get into trouble. Nothing we can do about that, okay? So now, as you can see here, the price did not go up straight away. You see, it went down a bit and then went up and they push it down. But where the professional want to buy, and then again people bought it here, you will see whether they were right. But it went up again because you see the CCI here display double bottom pattern. Some traders are trading the pattern of CCI. CCI display double bottom, people will buy. Display double top, people will look for opportunity to sell. Display a lower top, people will look for opportunity to sell. Some traders will trade the CCI because they think that it's a smooth price. Now, if you understand what you are doing, nothing wrong with that. All right, but keep eyes on the price. If you understand it, okay. All right, nothing wrong with that. Okay. But finally, here he was again oversold. Where? Near the trend line. Professional want to buy here. Though these people were buying fast, professional said, "What's going on, man? Hold on, guys. That's not the best way to buy." And they brought it here. This is the lowest risk point. You have to understand professionals are dealing with a lot of money, millions of dollars, millions of pounds, millions of euros, and they are professional. If they don't perform, they can lose their job. So they are not prepared to jump into the trade and lose their firm money. They're waiting for the low risk entry point. So follow the full step of the professional, all right, or some of the crazy algorithms, all right, because they suck most of the human being now. So these are computers trading most of the time now. So the computers know that there is a bullish trend line here. Look. All right. Let's draw another trend line. Again, going to start here. And this time, I'm going to draw it this way. Pay attention carefully. That's it. This time, what I'm doing, I need to explain it to you carefully. Yes, I'm drawing this point and this point here. Now you have to see that the first one that I draw was this point and this point. Now I'm carefully drawing this point and this one here at the lowest point of this doji here. You see? Though the price couldn't touch this, the first one that I've drawn, I have two lines, can you see on your chart? Though the price couldn't touch the first one that I've drawn, it was very close to the second one that I've drawn. And professionals were happy with that, and that's where they took it. They knew that there are people buying too much, so it's not going to come, and they follow the candlestick pattern here. It tried to come back again, but couldn't display a new lower low, but form in fact, okay, an inverted head and shoulder pattern. This is the head, the left-hand side shoulder, and the right-hand side shoulder here. And from there, they will use what we call a target zone for the, the inverted head and shoulder pattern. Probably break above the neckline, all right. And we will use the projection, all right, from here to here. That will be our first target level, all right. If it goes above our first target level, now you will follow me. We will use the same measuring stick, and this is the second target level. That's where finally they took profit. So it was very bullish here, and they finally took profit. You see here the price was desperate to come to the trend line, but because of the neckline, professional did not forget this neckline here. Beep, 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 beep. You see? On the dot. Trading on the edge. Again here. Retesting the neckline. And they take it again. Alright? Keep eyes on the price. The indicator is there to help you, but the price will do better job for you. Alright? So you see the mistakes that you are making if you are using the CCI. You see here, this is a beautiful one. The CCI was very, very oversold. You see how it went too deeply into it. But I want you to see this clearly first, okay? So the first time the CCI dipped below the zero, the minus 100 level, the price was here. That's correct. Pay attention to a vertical line, all right? So when it dipped below the zero line first, why am I saying the zero line? All right, now because I trade too much MACD, isn't it? So when it did below the minus 100 level for the first time, all right, if you were just trading, all right, the CCI, looking down instead of looking up, you'll make a mistake. But if you draw your line and you know exactly what was taking place, you know that there's an inverted head and shoulder here, there's a neckline here, you will prefer to buy here. Even better to the trend line, but you know there is a neckline here, and you buy together with the professional instead of buying here because what? The CCI 21 is oversold. Are you getting a mistake that you are making? So I'm drawing your attention now to the price all the time, isn't it? Yeah, the same thing we do whether you are using TSCW 24 or TSCW SY008. The attention to the price. To the price, to the price. Very often traders spend years doing all sort of, creating all sort of trading strategy, some sleepless nights and all these things, until one day it clicks to them that it is the price, okay? And they start loving the price, okay? So you see what's happening now? The mistakes? Are you with me, all right? So here we are again, the CCI dip below the zero line, below the minus 100 level. The CCI is oversold. Okay, before that it was oversold a long time, isn't it? Here, for the first time it dipped below the minus 100 level, was oversold. CCI period 21 that I'm using here, which means I'm comparing the price to the moving average 21. So that's where I put my vertical line, okay? So if you start buying like this, okay? Now here it was not too bad because, why? But in fact, it's a bit crazy because the second projection of our target level is here. So if we would like to buy, it's not good to buy here, though there are some support here. This is why we are talking about multi-talented trading. So we are using CCI, but we don't want to forget everything else that we know about trading. The inverted head and shoulder pattern, the target zone, okay? Though there are some support here. But the CCI was oversold. Yes, there are support here. We may look for opportunity to buy here. But that's not a good place because the latest target is this line here. So it will be nicer to look for opportunity to buy if it goes above this level. Sometimes there's something I say to traders all the time. I say, I will look for opportunity to buy provided that the price dip below this level. But sometimes traders do not pay attention to what I said. They'll say, he said that I will sell. No, I'll look for opportunity to sell, provided that the price remain below this level. If it goes above that level, we'll look for opportunity to buy instead. So it's always like this, all right? Now, or sometimes we count an earlier wave, because the earlier wave we're going step by step, as the market is moving forward, all right? Now, apart from the price and the theory, there are economy news, you know, Japanese economy, the Fed making decision, all these things can change, okay? The technical analysis. But sometimes they forget that. They say, no. We want it to be easy, but it's not always easy, okay? There are some homework to do all the time, okay? So here we are again. So it will be better to look for opportunity to buy above, okay, the latest target level, which is this one here. But you see, it stay below it. And though the CCI was sold, if you were told to buy like this, you see what will happen? You see, it's just going down, till it went to the trend line this time. In fact, where it stopped is still the neckline. You see this neckline here? This, let me highlight this for you. This inverted, powerful chart pattern. It's a bullish, the best bullish chart pattern, okay? One of the best, because the price was displaying. It's nice. It's a nice pattern because price display a low followed by a lower low. It's bearish. Now there was a high, a lower high, a low, and a lower low. It's bearish. Suddenly, the momentum has changed. The price display for the first time a new higher low, telling us that the momentum is changing. Now we must pay attention to the neckline. See how beautiful, gorgeous, all right? Gorgeous, bullish pattern. If you understand it, okay? Always use the trading drill, the setup, the signal, and the low risk entry point. Don't just trade the pattern by itself, okay? So again here, we will get into trouble if you were just buying like old-fashioned. In the past, this strategy worked. In the past, all day, people were trading like this. Everybody was doing that. Was working. Now with the computers and the money and the market getting smarter and smarter with algorithms, and it's becoming like computer games, a competition between the algorithms. All right, be the first to know, be the first to enter the trade, be the first to take the best profit, be the first. Okay. Best trader in the world. So all this competition, now the trading is more like computer games. All right. So in the past, people were trading like this, and you will read about it on the internet. When the CCI is oversold below -100, buy. Crazy advice. Don't take it. All right. Don't buy. Look for opportunity to buy. If there is no opportunity, don't buy. Okay. Don't buy. And use the price, all right? Use the price safe, the number one indicator, and you'll be all right, okay? Now, I'm not making fun of them, but I'm laughing so you can get the message, all right? So you see now, it makes sense, okay? Now, this is the first part of CCI trading mistakes. I will be recording another video, and I will show traders, okay, more about the trading mistakes that traders are making, all right? And in the second video, we will talk about the sell signal, the overbought zone, and what traders need to pay attention to so they can avoid, okay, the commodity channel index indicator trading mistakes. All right? So draw your channel, draw your trend line, focus on the price. Yes, look at the indicator, but spend most of your time looking at the price itself. I recommend that traders use a different setting for their commodity channel. Stay away from 14, all right? I will talk about that in maybe another 14, and maybe I'll record a video that I will title Why the Commodity Channel 14, all right? Because this is the default setting that you will see on all software. If you are stuck with a software that does not allow you to change your setting, I mean, you should look for another charting software, because you are the boss, you are the decision maker. You should be able to change your settings, all right? Now, what's happening now with this stock? We're on a daily chart. Now again, before I close the video, here it is, touch the oversold zone, touch the oversold zone, here again it touched the oversold zone. which one is valid. All right, you should be able to do this by yourself now. All right, always draw your lines. Okay, we can also combine the CCI and the pitchfork tool, which I can record a video about later on, and that will help us also to make excellent decisions. I hope you have learned something from this video also, and we'll put it into use, okay, to make excellent trading decisions. We are the TSTW 24 traders. This is about the CCI indicator, trading mistake, part 1. See you in the next video. Stay tuned. If you like this video, do not forget to like it. If you dislike it, do not forget to dislike it. If you have any comment, put it below. We like this interaction. Speak to you soon.